Some people need to sell their home, right? And if you need to sell, well, then you're going to have to cut your price because that's the only way the buyer can afford to pay. The market is gradually going down. Even if I've got a house that has gone down in price or in market value, if my mortgage payment is lower than what I would have to pay if I rented a place, then I'm just going to stay in my house. Doesn't really matter to me what the price is. Home equity goes away. So a lot of people, even though they're living in their house and they've got a low mortgage payment, the fact that they no longer have all this home equity, you may have a fixed rate mortgage. And so your mortgage is not going up, but all the other costs associated with home ownership are going way up. I mean, that hasn't stopped. Maintenance, insurance, utilities, that's going to keep going up. And that's going to be a problem. And what I see happening in the future is I think more people who own their homes are going to rent out rooms. They're going to, if they have a spare room, to generate income. They don't want to leave their house because they've got this cheap mortgage, but they can rent out rooms. They're going to print a lot of money because remember too, all these retirees are going to stop working. They're not going to pay Social Security taxes anymore, but they're going to collect the benefits. And there's bigger deficits, more inflation, more money printing, which will drive up house prices because it's going to make homes that much more expensive to construct. The materials go up, the labor costs go up. But I mean, in real terms, right? If you want to take a look at housing prices in terms of gold, how many ounces of gold will somebody need to buy a house? I expect a crash, maybe 80, 90% decline in real estate prices in terms of actual money, real money, but not in terms of the fiat money that we create. That is the problem. The money could lose more value than the house. But that doesn't mean that real estate prices can't come down in nominal terms. I mean, they certainly can. And in some parts of the country, they definitely will, I think. And you look at some of the markets where you have really overpriced homes, like in California, for example, and you look at the price of a house relative to the average income of the people who are living there. People have really been stretching to buy real estate there. All this problem is the result of the tremendous government involvement in the real estate market. The government should have no involvement in real estate. There should be no Fannie Mae, Freddie Mac, FHA, and they should not be involved in banking because banking is a big part of real estate because of mortgages. There should be no FDIC. There should be no government guaranteed bank accounts. There should be no government guaranteed mortgages. If we had had a free market all along in housing, we wouldn't have any of these problems. Housing never would have gotten so expensive. We never would have had all these booms and busts. People would have bought houses that could afford them, and the people who couldn't afford them would have rented, and we would have a much sounder economy. But everything is screwed up because of the way the government has distorted the market with all their guarantees and all the moral hazards that it has created and the decisions that have been made that absent these government distortions never would have been made. I mean, a free market, people make sound decisions because they're guided by not only the motivation of profit, but the fear of loss. But the government comes in and tips the scale so that people aren't as worried about losses anymore. And so they just think about the gains. And so they take tremendous risk, which they would not take in a free market. Two forces that are counter one another. So number one, the increasing construction costs, labor and materials, means that fewer homes are going to be constructed. And so that keeps a limit on the supply, right? Meanwhile, people are being born, people are growing up, people are wanting to enter the housing market, but there's no incremental supply because the cost of construction is beyond their ability to afford. So now you have to bid for the existing stock. So that's putting pressure up. Right. At the same time, if it costs a lot to maintain the home, then fewer people will buy. But I think what ends up happening in many cases is the housing stock falls into disrepair. I mean, people are still in their homes. They just don't maintain them the way they did. And so eventually they become a teardown. And it can be a problem for the lenders when the properties aren't maintained in a condition that would maintain the market value of the properties. But yeah, that does happen. And of course, people, could stop using their heating or using their air conditionings, or just keep them at temperatures that are not ideal. So maybe in the winter, they wear sweaters in the house. They turn the heat on, but maybe just in one room at a time. People will take on boarders, roommates. That is going to happen, right? So multiple families will be sharing a single house. I mean, you've already seen that. You can see like a lot of in cities, homes that were built as single family homes are now fourplexes. So we've already had that people condensing down. Either we're going to get rid of Social Security or we're going to wipe it out with inflation. But at the end of the day, a lot of children are going to have to take on the responsibility of their parents because they're not going to be able to survive on their inflated away Social Security benefits. Instead of having society take care of your parents, you got to do it yourself. I support my mother. And that is the way it should be. It shouldn't be like a society kind of thing that nobody has any responsibility for their parents, that somehow the state is going to take care of everybody when they get older. No, I mean, you should be in a position to save. And if your parents didn't have enough saved for their retirement, you take care of them. They took care of you when you were a kid. You know, you could take care of them when they're older, and then your kids could do the same thing for you. It's not that we should just push off everybody on the government and assume that, oh, I don't have to be responsible because the government's going to take care of everything. Because when that happens, the government doesn't take care of anything. You're not investing in gold, you're holding gold. You're holding gold as money as opposed to holding dollars or euros or yen. You know, it's not an investment. If you buy stock in a gold mining company, well, now you're investing in a gold business. So that's more like buying stock. Buying gold is like keeping cash. So if you're going to stuff cash under a mattress, wouldn't you rather put gold under the mattress, right? I mean, gold is going to hold on to its value rather than cash. Now, the Bitcoin people just don't understand what gives gold value. They just assume that gold's value is just a function of belief, that we just decided arbitrarily that because gold was shiny that it had value. But gold's value comes from its metallic properties that are very unique to gold. They're properties that other metals don't have. So gold can provide utility that you can't get from other elements, other metals or other commodities. That's where gold gets its value. But the reason that gold also can be money is because not only can it store that value, because gold doesn't tarnish, it doesn't decay. It holds on to all of its properties, no matter how long you hold it, no matter the environment. Ships went down 400, 500, 600 years ago. And if you can salvage it, the only thing that might still be on the bottom of the ocean is the gold coins that were in a little case or whatever. And they're as beautiful today as they were 500 years ago when the ship sank. Everything else is gone. Everything else is decayed, rusted, but the gold's still there. So gold doesn't lose its value over time, so it could be a store of value. But the way gold works, the way it can be melted down, the way it can be made into coins, the way it can be divided and transported, it had all these qualities that made it the best form of money. And a lot of other commodities have been used as money, but none more successfully than gold. The Bitcoin people think, well, we could just artificially replace gold with a string of numbers. All we have to do is limit the supply and call it Bitcoin, and it's going to have value. No, it doesn't. It's just the latest iteration of fool's gold. There is nothing that Bitcoin and gold have in common, because there's nothing that you can use Bitcoin for or that you need gold. You can't substitute. You can't say, oh, I'm going to use Bitcoin instead of gold to conduct electricity in this computer chip, or I'm going to put Bitcoin into this crown, or I'm going to put Bitcoin into this watch. No, you need gold. There is no ability to substitute Bitcoin in any way for gold. But, you know, anything can have a price. Value, utility is one thing, but if people are willing to buy something, I mean, the price is whatever the market will bear. And there are a lot of people who have been conned into believing that Bitcoin is digital gold, and they've bought it. And yes, there is a limit on the supply. And so if the people who own that limited supply don't want to sell and other people want to buy, well, the price will go up. And you've seen that. You've seen a lot of people hodling their Bitcoin, right? They don't want to sell. Other people want to get in on the action, and so they want to buy, and the price goes up. But eventually the price has to collapse because the people that got in eventually have to get out. And how are they going to get out? Well, they got to sell. Well, sell to who? Who's going to buy, right? Eventually you run out of people who are willing to gamble on Bitcoin appreciation. There's no actual use for Bitcoin. So people only hold it in the anticipation of selling it in the future to somebody else at a higher price. So you have to constantly sucker in new people into the pyramid to enable the people who got in earlier to get out. Just like we talked about Social Security as a Ponzi, you got the same dynamic with Bitcoin. But none of these Ponzis can work because eventually you run out of the new buyers, and the older buyers want to cash in. They just don't want to die with a lot of Bitcoin in their wallet. They want to buy stuff. They want to buy a house. They want to buy a car. They want to buy new clothes. They want to go out to restaurants. They want to take a vacation. They need to sell their Bitcoin to do those things. Right now, gold mining is not that great a business because it's very expensive to mine that gold relative to the current price of, let's say, $2,300. But I think the price could go to $10,000, $20,000. The cost is going to go up, but not by that much. So let's say right now, gold is $2,300 an ounce, and it costs me $2,000 an ounce to get it out of the ground. I can make a little bit of money, but it's not great, right? Making $300 on $2,000. But what if it goes to $20,000 and the cost goes to $5,000? Well, now you got a hell of a business, right? Look at the margin. It's costing me $5,000 to get the ounce out of the ground. I can turn around and sell it for $20. I'm selling it for 4 times what it cost me to mine it. Those are the dynamics that I think I'm going to be looking at in a few years. So that's going to mean that my gold stocks that I bought are going to have a much, much higher value because the profits that they're going to be able to generate are going to be substantially higher in the future than they are right now, which means they can dramatically increase the dividends that they're paying me. And that means if somebody wants to buy that stock, they're going to have to pay a lot more to get that stock because of all the income and the dividends that the companies are paying. I don't think there's anything that's going to happen politically. Maybe the one wild card could be AI to the extent that it can unleash a massive increase in global productivity such that the price of everything collapses because of massive increase in supply. That could be negative for gold. Gold might go down less than a lot of other goods. And so on a relative basis, you still might be better off. But I think if gold is undermined, it's going to be by the free market. It's not going to be by the government. The government is going to do everything wrong. I'm confident of that. Nobody is going to make any money betting that the government gets it right. But if we do have a monetary crisis, if the dollars crash, gold's $20,000 an ounce, we're having, riots in the streets and food shortages and blackouts and all this kind of stuff. And the government is desperate for hard money because they can't print gold. In that environment, they may try to confiscate it. But it's not easy to do because how do they know you have it? Because it's physical gold. They don't know what you got. Even if somebody bought gold from Schiff Gold, assuming that they could get our records, they have no proof that the buyer still has it. Well, I lost it. It was stolen. I don't know. I buried it in the ground. I forgot where I put it. I don't know. How do they know? We probably will need a lot of gold to increase the compute, building all these GPUs and all the resources. AI is going to be ultimately about resources, right? Because it's going to need tremendous resources to create the things that it may be capable of creating, unless at some point it's able to create gold and figure out a way to produce it out of something that isn't gold. I don't know. Right now, AI is increasing the demand for energy. It's very expensive to power the computers that makes the AI work. So in the short run, it's pushing up prices because there's not a lot of output right now, but they're sucking in a lot of input. But that could flip at some point when AI really starts working its way into production so that we can produce more stuff with less labor, ultimately less material. But initially, we'll probably need more material. The costs that we get rid of are the labor because we get the computers to do what humans used to do, both on a cerebral, where we can eliminate a lot of the thinking work to eventually the manual labor. But now they need a robot or something that can move. But once you can put an AI, intelligence into a cost-efficient robot, now you can start eliminating a lot of manual labor. And it's not so much you're liberating the labor because now the people don't have to do it anymore. And now you have the potential to have an unlimited labor force. Your labor force is not constrained anymore by the birth rate or any of that. If you could just make robots and then the robots make more robots. But, I don't know how far into the future all this stuff is. But I have a feeling that the financial crisis, economic crisis will come first. So I think we have that to look forward to at some point. But in the shorter term, I think we have a dollar crisis, a sovereign debt crisis. I don't think that the AI, get out of jail free card is going to turn up in time, but it's possible. As I said, that is one wild card that may end up, buying more time. Well, the government's just going to act responsibly and we're going to massively cut government spending. We're going to allow interest rates to go way up. I just don't see politics allowing that.